Hello, everyone. Thank you very much for coming back and welcome back. I think we have missed a couple of weeks and we are starting our webinars once again. I was traveling, so we were not able to continue the webinars. So we'll keep discussing all important topics. And moreover, a lot of people are asking this question that they are in need of presentation, or they are in need of the lectures. So you can find our YouTube channel. This is a Chris Cooper. So you can go youtube.com/c/Chris Cooper. You can find all our live webinars there. So we are discussing today. We already discussed the corporate tax on the free zone businesses. In the free zone businesses, specifically, we will be focusing on the de minimis criteria. So what is de minimis? What is the application of de minimis? How the businesses can take the benefits from the de minimis criteria? We'll be discussing all these things in detail. So as usual, we are starting our discussions with the scope of the corporate tax law on the free zone person, and the scope of the corporate tax on the free zone person. We know this, that the 0% corporate tax will be applicable on the qualifying income and 9% tax will be applicable on the non-qualifying income. We discussed what is free zone, what is a free zone person, what is a qualifying free zone person, and what is the qualifying income. We discussed free zone is a designated and defined geographic area within the state that is specified in a decision issued by the cabinet at the suggestion of the ministers. Now the question arises, either the all free zones are considered free zone for corporate tax purposes. I think the specific decision has not been issued till now. Might be they will issue the decision on this. Principally, there should be a decision because it has been written in the law that the defined geographic area within the state that we already discussed in detail. Then they discuss the free zone person. In the free zone person, we said free zone person is a juridical person incorporated, established, otherwise registered in a free zone, including a branch of a non-resident person registered in a free zone. So these are only juridical persons, any natural persons, civil company, sole establishment, natural persons, they will not be part of the free zone person. Only juridical person means the company which is registered within the free zone, other than sole establishment, if any, or other than the civil company, they will be considered a juridical person. All companies other than this. Then we'll discuss qualifying free zone person. In the qualifying free zone person, it was given in the law. There are 4 conditions for a free zone person to be considered a qualifying free zone persons. And these 4 conditions were: the person maintains the adequate substance in the UAE, drives qualifying income, not elected to be subject to corporate tax, and complies with the transfer pricing rules and documentation. That thing we have discussed in detail as well. After this, 2 more conditions were introduced in the respective cabinet decision. These 2 conditions were: the non-qualifying revenue should not exceed the de minimis requirement. This is the word that I will be focusing on. What is the de minimis requirement? Then the qualifying free zone person will need to prepare the audited financial statement as well. So on overall basis, we have concluded in our previous discussion, there are 6 conditions for a free zone person to be considered a qualifying free zone person. These 6 conditions were: the person maintains adequate substance in the UAE, derives a qualifying income as specified in the cabinet decision, complied with the prevailing transfer pricing rules and regulations. The free zone person, has not elected to be subject to corporate tax. The person meets the de minimis criteria and have the audited financial statements as well. If these if these 6 conditions are being fulfilled, then we can say the free zone person is a qualifying free zone person. And we know this, the qualifying income of the qualifying free zone person will be subject to tax at 0%, and the non-qualifying income of the free zone person will be subject to tax at 9%. If we're discussing these criteria one by one, we have already discussed the adequate substance. In the adequate substance, we discussed the free zone person must have the core income generating activities in the free zone. Along with this, the person must meet the adequacy test as well. In the adequacy test, we discussed the free zone person must have the adequate substance in the free zone. The free zone person must have adequate employees in the free zone, and the free zone person must have adequate expenses in the free zone as well. So if these conditions are being fulfilled, then we will say the qualifying free zone person have adequate substance in the UAE. Then we discuss the qualifying income. This is the most important thing. The specific cabinet decision, 2 cabinet decisions have been introduced on this. These are ministerial decisions. What is the qualifying free zone person? We have discussed in detail that the qualifying free zone person, we have classified the person, and we have classified the free zone person based upon the income that they are deriving. We established that if the person is deriving the income from free zone, if the person is deriving the income from the free zone person or free zone, there is a possibility that the person is deriving income from other free zone persons, a juridical person registered in other free zone. Then we say if the qualifying free zone person is deriving income from other free zone persons, then the income of the qualifying free zone person will be qualifying income except the income that the person is deriving from the excluded activities. We have discussed the excluding activities in detail also. So if the company is based in Jabza, this Jabza company is deriving income from the other free zone persons, the whole income of the Jabza company will be qualifying income except the income from the excluding activities. Then we discuss the special rule have been introduced for the commercial property as well. The commercial property which is within the free zone. A commercial property which is within the free zone and transaction is being made with the other free zone person, that commercial property is specifically being used for business purposes. This is not a residential property. This is not a property that is being used for accommodation purposes like hotels, like service apartments. So these hotels, these service apartment, it will not fall under the definition of commercial property that is being specifically used for business purposes and not being used for accommodation or living purposes. Then we said if the free zone person is making any transaction with the other free zone person from the commercial property which is within the free zone, that property is being used for commercial purposes, for office purposes other than accommodation and other than living purposes, then we said this income from the commercial free zone property will be qualifying income. Any income other than this, any income other than from any immovable property, either the immovable property within the free zone, out of the free zone, or immovable property is within the free zone, but the transaction is being made with the non-free zone. But whatever the scenarios are there, except one scenario, all income from the immovable property, it will be non-qualifying income. Then second thing we discussed, the income is being derived from the person which is out of the free zone. There is a possibility that income is related to the domestic PE or foreign PE. We established that any income derived from the domestic PE, any income derived from the foreign PE, both of the income will be non-qualifying income. Then we discussed that the free zone person, qualifying free zone person, is deriving any income from the non-free zone person, but that income is from the qualifying activities, then it will be considered qualifying income. Other than this, it will be considered non-qualifying income. So these categories, based upon this category, we established there are possibilities. The four different types of income will be qualifying income. The first income derived from the free zone based commercial property exclusively being used for business purposes, not for living and accommodation purposes, while the other party is the free zone person. Then we establish income derived from the free zone person, except income from the excluding activities. Then income derived from the non-free zone person from the qualifying activities, which are not excluding activities. And then we discuss non-qualifying income if this meets the criteria, and the criteria is 5% or 5 million, whichever is lower, then that income will be considered qualifying income as well. So these four categories so on overall basis, we discuss that if we are classifying the whole world, if we are classifying the whole world, sorry, the issue with the pen. So if we have discussed that if we are classifying the whole world into the four zones, these zone can be, one can be free zone, the second zone can be all free zones, like one company within the Jobs, second is the all other free zone in the UAE, third layer can be UAE mainland, and fourth layer can be rest of the whole world. So these four zones, based upon this, if there is an immovable property and that immovable property is within the free zone, within the Jobs, and the transaction is being made with the other free zone person, the property, the commercial property, and this property is being used for business purposes, not for living purposes, not for accommodation purposes, then income will be qualifying income. Other than this, if the property is anywhere in the rest of the world, or if the property is on the UAE mainland, then that income from that property will not be considered a qualifying income. So these are the 6 conditions that were discussed. Person is a qualifying free zone person, property is in the free zone, property is a commercial property not used for accommodation or residence purposes. Property is being used exclusively for business purposes. Transaction has been made with other free zone person. Then we discuss other than immovable property, we discuss then if the income of the free zone person, if the free zone person making any transaction with the other free zone person, me within the same free zone or within the first layer, then that income will be considered qualifying income, except the income is from the excluding activities. Then we discuss if the Jobs person is making transaction with the mainland, or if the Jobs person is making transaction with the rest of the world, and that is not from the PE, domestic PE and foreign PE, but that is the qualifying activity, then it will be qualifying income. Other than this, it will be non-qualifying income. For the de minimis criteria, we discuss the threshold is 5% of the total revenue or 5 million, whichever is lower. So if you are going back to this diagram that we discuss again, you can go into the last row, which income will be included while considering the de minimis criteria, which income will not be included while considering the de minimis criteria. If you can look into the column, first column said if the person is deriving any income from the other free zone person, that will be considered a qualifying income except the income from the excluding activities. And I have mentioned it very clearly here. Income from excluded activities to be included for the de minimis criteria. So basically, the qualifying income, I maintain the income from excluding activities shall be included for the de minimis criteria. In the next, there are two possibilities we have already discussed. One stream is that the qualifying income, second is the non-qualifying income. Qualifying income and non-qualifying income, both of these will be excluded because the income will be subject to tax at 9%. The reason is, if the person is deriving income from the PE, local PE or foreign PE, or if the person is deriving income from the immovable property, which is not a qualifying income, it will be subject to tax at 9% and it will be excluded for the calculation as well. In the third, you can say if the income is being derived out of the free zone from income from the PE and income from the local PE, foreign PE, both of these income will not be considered to calculate or to apply the de minimis criteria to calculate the percentage. Then in the last column, if the income is being derived from the non-free zone person, if this is the qualifying income, it will be included for the de minimis in the denominator only. And if this is non-qualifying income, included for the de minimis criteria. So based upon this, I have summarized this discussion. While calculating the percentage of 5%, nominator is non-qualifying income from excluding activities from transaction with free zone person and non-free zone person, and non-qualifying activities where transactions are with the non-free zone person. I'm repeating. So if the free zone person is making any transaction with the other free zone person, it will be qualifying income other than excluding activities, which will be non-qualifying income. Income from the excluding activities, even the transaction is being made with the free zone person, even the transaction is being made with the non-free zone person. In both of the cases, income from the excluding activities shall be included for this calculation of the percentage. Then if there is a person is making any transaction with the non-free zone person and these are non-qualifying activities, then this will be included for the calculation of de minimis criteria as well. It will be in the numerator. In the denominator, we need to consider the total revenue except two types of revenue. Total revenue except two, and these two types of revenue are subject to tax at 9%. We have discussed in our previous slide as well, so it will not be included. So in the denominator, it will be total income except the income from the PE. This can be domestic PE or it can be foreign PE. Other than the revenue from immovable property, that shall not be included a non-qualifying income and total revenue. Basically, if the immovable property, income from the immovable property, the qualifying income, then it will be included. If this is a non-qualifying income, then it will not be included in the numerator as well as in the denominator. So de minimis percentage is equal to non-qualifying income is equal to de minimis percentage is equal to non-qualifying income, income from excluding activities, income from non-qualifying activity with the non-free zone person, divided by total income less the income from the PE, which can be domestic PE and foreign PE, less the income from the immovable property, which is not a qualifying income. So based upon this, I have drafted this example, and this example is, for example, COBS, assuming COBS has fulfilled all the 6 conditions that were discussed that make a qualifying free zone person a qualifying free zone person. We are assuming for discussion purposes that the COBS is a qualifying free zone person. So COBS is a trading company registered in the JAFZA. COBS has sold goods to Mr. A. Mr. A is a natural person. This natural person can be a sole establishment as well. It can be civil company as well. It can be unregistered partnership as well. It can be trust. It can be basically, if these are trust or unregistered partnership, if these are not legally structured, these are not properly registered, then we'll say it will be considered natural persons. So Cobbs Limited has sold goods to Mr. A in jobs of 1 million. Keep in mind, Mr. A is a natural person, and the transaction with the natural person are excluding activities. And their sales, except few transaction with the natural person fall under the definition of excluding activities. And their sales to Jebs Limited, a safe free zone company, is 15 million. Now, Cobbs is the free zone person. They are making transaction with the other free zone person, Jebs Limited, which is in the safe free zone. So the revenue from the other free zone person is a 15 million. We have already discussed that if the qualifying free zone person is making any transaction with the other free zone person, the income will be considered qualifying income. Cobbs Limited has sold goods to its UE mainland branch. UE mainland branch is a permanent establishment of the Cobbs Limited, because we know the definition of PE, permanent establishment. So branch on the mainland is a domestic PE. So domestic PE, the income from the domestic PE is 7 million, and the sales to the Bahraini branch is 12 million. The one more branch they have in the Bahrain, this is a foreign PE. So income from the foreign PE is 12 million. The sales of Cobb Limited to UE mainland distributor is 30 million. The sales of Cobb Limited to UE mainland distributor is a 30 million. Mainland distributor means the person will be further selling the goods. This is a qualifying activity as per law. So if the Cobbs Limited is making any transaction with the non-free zone person of 30 million, then this is the qualifying activities, which is not itself excluding activities. So income from this, it will be a qualifying income. Cobbs Limited has sold Jafza-based building to UE mainland party, 20 million. Now this is the immovable property, office building being used for commercial purposes. This is not residential. This is not being used for living purposes. This is not being used for accommodation purposes. But the problem is they have made this transaction with the non-free zone person. If they made a transaction with the non-free zone person, then income from this property will be considered non-qualifying income. And the last one, the Cobbs Limited has sold another Jafza-based office building to a Jafza-based company of 25 million. Now, commercial property being sold to other free zone person, commercial property within the Jafza, other party, the other free zone person, property is not being used for accommodation purposes, property is not being used for living purposes, property is not being used for residential purposes. So any income from such property will be considered qualifying income. So based upon this discussion, if I'm asking income, 1 million income, 1 million income is from the natural person, non-qualifying income, excluding activities, sales to the gems, qualifying income, goods you in mainland, PE, income from PE, local PE, foreign PE, we have already discussed, both will be subject to tax at 9%. It will not be considered while calculating the percentage. So 7 million will not be considered, 12 million will not be considered. 1 million will be considered in the nominator because this is income from the excluding activities. 15 million is a qualifying income. It will be considered in the denominator, but not in the nominator, in the denominator. The sales of Cobb Limited to UE distributor is an income from the qualifying activities. It will be considered in the denominator. It will not be considered in the nominator. Jafza-based building, 20 million. This is the non-qualifying income. This non-qualifying income is subject to tax at 9%. We have already discussed that if this is a commercial property, that from the commercial property, if we are generating non-qualifying income, it will be subject to tax at 9%. So it will not be included in the nominator. At the end, income from the commercial property, it will be included in the denominator. Based upon this, in the example, the non-qualifying income only 1 million, which will be considered for this discussion, and the total income is 71 million. How this 71 million has been included? This 71 million is all income except the income from the PE and income from the commercial property, which is subject to tax at 9%. Income from PE is 12 plus 7, 19 million, 19 million plus 20 million, 39 million. Other than this 39 million, you will need to consider the total income, deduct 39 million, remaining will be 71. So 1 divided by 71, de minimis percentage is 1.4% and our criteria is 5% of the total revenue. So we can say the de minimis criteria has been satisfied. Once this de minimis criteria has been satisfied, the non-qualifying income of 1 million, it will be considered qualifying income and it will be subject to tax at 0%. Might be you people are thinking few income has not been considered. What is the reason for this? The reason is income from the PE, even domestic PE, even the foreign PE, it will be subject to tax at 9% straightforward. It has been given in the law. So no need to consider into the nominator and denominator. Moreover, income from the commercial property, where the income from the commercial property is not a qualifying income, that income will be subject to tax at 9% as well. So no need to consider it in the nominator, no need to consider in the denominator. So this is the reason we have removed the rest of the all transaction we have considered. I believe everybody will be satisfied. So what is the de minimis criteria and how can we apply the de minimis criteria? How can we calculate the percentage? Which transaction should be included? Which transaction should be removed? All this, we can look into this example. It will give a thorough understanding of the de minimis requirement. We all know this, the excluding activities, income, natural person, these are the natural person. There's some exclusions are there. We know we've already discussed in detail. Then income from the banking activities are excluding activities as well. Income from the insurance activities are excluding activities as well. Finance and leasing business, except these finance and leasing, the trade and finance and related party are financing leasing of aircraft, including engine roadable component. These all will be considered excluding activities. We have already discussed income from the immovable property, except one stream of revenue that we have discussed, it will be qualifying income. Other than this, it will fall under the excluding activities. Ownership and exploitation in intellectual property. We know this, what is intellectual property, all the intangible assets like patent, copyright, software, all the intellectual property assets. If you're generating any revenue from them, it will fall under the definition of excluding activities. Then any activity which is incidental to these activities, means these entities cannot be performed standalone basis, but these are part and parcel of the main entity. These activities are being performed to support for the main activity. Then it will be considered incidental activities, and any revenue generated from the incidental activities, it will be treated like the revenue from the main activity. So these are transaction, natural person, banking, insurance, finance and leasing, immovable property, intellectual property assets, other incidental activities, except the exclusions, except the exceptions that are discussed in detail. So it will be considered excluding activities. Income from the qualifying activities, manufacturing of goods and material, processing of goods and material, distribution. We already discussed distribution. If the goods are being distributed, bought in the Jafza and being sold through the Jafza, and these are being sold to for the resale, then it will be considered qualifying activities. Other than if the goods are being sold, other than Jafza, the goods are being sold to the end user, it will be considered non-qualifying activity. It will attract 9% corporate tax. The following activities like funds management services, wealth and investment management services, headquarters services provided to related party, treasury and financing services to related party, all these will fall under the definition of qualifying activities as well. Holding of shares and other securities, reinsurance services are qualifying activities, insurance services are excluding activities. Logistics services are also qualifying activities. Ownership, management, operation of ships, financing and leasing of aircraft, including engine and roadable components. These all will fall under the definition of qualifying activities. Any activities that anciently we have discussed, any dependent activities will be treated like the main activity, because these activities cannot be performed on a standalone basis. So summary of the discussion, we have qualifying income of the qualifying free zone person, 0%, non-qualifying subject to tax at 9%, qualifying income we discussed 4 different de minimis criteria is being met. Income from the other free zone person except excluding activities, income from the other free zone person, income from the free zone person except excluding activities, income from the other free zone person from the qualifying activity which are not excluding activities, and then income from the commercial property which is in the designated zone, not being used for residential accommodation purposes, and this income is generated from the other free zone person. Other than these 4 categories of income, every income will be considered non-qualifying income, which will be subject to tax at 9%. So free zone summary, again, a free zone person cannot be a part of the qualifying free zone person, cannot join the tax group, cannot restructure, cannot transfer the assets. So basically, this is the reason that the qualifying free zone person can opt to be subject to tax at 9%. Basically, in normal way should be treated. How can we help? Basically, we can help. We are already helping a lot of businesses into the market for the impact assessment. We are already helping them for the implementation, advisory, compliance, restructuring, where we are not violating the anti-abuse rules. So if you are in need of any support regarding this, you can reach us. You can contact me. You can contact Faiza, who a tax director. You can contact our managers as well. We are always ready to listen, understand, and deliver. We can be approached on info@crestcooper.com. As I mentioned in the very beginning, don't forget to subscribe our channel. We are posting all our latest videos and so many other material you can find there about the UBO, but you can the compliance, ESR, corporate tax, VAT, even the strategic financial management. We have a lot of other plans to put so much material over there on our channel. So you can subscribe it and you can get the latest and updated information. Thank you very much for being with us. If you have any questions, I'm happy to address. Few questions are there. Is DMCC company incorporated company qualifying free zone person entitled for a 0% corporate tax? DMCC, I have discussed in detail. I have discussed what is qualifying income, what is non-qualifying income. We need to apply that criteria. Then we will be able to assess. Basically, we cannot establish it based upon the company, location of the company. This is the activity based. First of all, know your status, then know your activity, know your customer, then you need to apply the tax. This is a very simple criteria. Will free zone person be treated as juridical person or natural person as per corporate tax law? Free zone person has share capital but is sole establishment. Please clarify. Law is saying basically sole establishment and civil companies are not juridical person. Other than this, these will fall under the definition of natural person. Other than this, any company which is established, incorporated within the free zone, it will be considered a juridical person. And free zone exemption, qualifying income, all this applicable in case of juridical person. Qualifying income, one more question. Qualifying income is defined to comprise very limited activities. No, qualifying income is comprise unlimited activities except excluding activities which are only 6 activities: banking, insurance, natural person, fund manager. Very few, other than 6 or 7 activities, all the incomes of the qualifying free zone person with other free zone persons are qualifying income. But if you are dealing with the non-free zone person, there are only 14 to 15 activities, 14 to 15 activities which is qualifying. Other than all will be non-qualifying income. The limit has comprised very limited activities. People advise how travel and tourism activities accommodate the definition of qualifying. No, travel and tourism is straightforward subject to tax, my friend. These are not qualifying activities. These are not qualifying activities, and these, if you are in the designated zone, you are providing these services to other free zone person, then you can enjoy the benefits of 0% corporate tax. Otherwise, it will be subject to tax. Sawaj is asking treatment of for COPs, selling goods to unrelated third party in other country. Let's see UK. Okay, COPs is asking, sorry, treatment for COPs, selling goods to an unrelated third party in another country, let's say UK, non-free zone person. If you are qualifying free zone person, you are making any transaction with the non-free zone person. If these are not qualifying activities, it will be subject to tax at 9%. So if you are supplying goods to UK, it will not fall under the definition of qualifying activities, so it will be subject to tax. But you need to make sure if you are paying any tax in UK, you will be able to get the foreign tax credit. It will be adjusted. Maximum the limit of foreign tax credit is 9%, not more than this. One more question. None of the 14 activities stated as qualifying activities. Okay. Under the CT law covers travel and tourism activities in which we are involved in the DMCC. Are we then not qualifying? I already told you. Travel and tourism subject to tax. This is not a qualifying activity. Hasib is asking, would you please clarify that all the free zones are under the definition of qualifying, or there is any division? Okay, I have discussed this in the very beginning. It has been written in the law that the free zones is a distinguished, defined area specified in the decision issued at the suggestion of the minister. Any decision has not been introduced. I principally, and I believe the FTA, the respected authority, will issue the decision. They will mention all the free zones that there are not. There should be some sort of decision on this. Hasib is asking one more question. There is a common practice in market. Under UE, local person obtains sole establishment license in his name and then give power of attorney to some to conduct business and charge a nominal amount. Okay, I noted this is a grocery maintenance workshop here. Who will be responsible for the carport? Now you can go for 100% ownership. If you're going for the 100% ownership, then ultimately the grocery person will be responsible. And if 51% are held by the local person, 49% are being held by the expat, business will be liable subject to corporate tax. And I believe their partners jointly and severally will be responsible to pay the corporate tax. Because of the power of having power in the ultimate beneficial owner. It doesn't matter. Either A, the ultimate beneficial owner, or B, the ultimate beneficial owner. The important thing is corporate tax is applicable on the company than the businesses. This is not applicable on the individual. So business itself will be subject to tax. Business needs to calculate the taxable income. And if corporate tax is applicable on them, they need to pay corporate tax. And we all know this, there is no corporate tax for the businesses having a taxable income up to 3 million by 31st December 2026. And if the natural person, 1 million, even they are not liable to get themselves registered as well. One more question, ladies salon, which is set up as a civil company in the mainland, will it be subject to corporate tax? No, civil company will not be subject to corporate tax, as this not fall under definition. Juridical person is a natural person. Even you are not liable to get yourself registered if your revenue is less than 1 million, you will not be subject to corporate tax. If a DMCC company sells goods only to foreign entities, would this be considered a qualifying activity? No, it will not be considered a qualifying activity. It will be subject to tax because it will not fall under the definition of the whole 14 activities. Hasib is asking one more question. The activity of distributing goods or material must be undertaken in or from a designated zone, and the goods or material entering the state must be imported through the designated zone. Yes. Let's say 20% is local purchase. Will it be trigger any activity to be non-qualifying? So you need to proportionate basically how much you have locally purchased and sold, how much you have imported through a designated and sold. If you imported through the designated zone and sold to a distributor, that portion will not be subject to corporate tax. And if you have bought locally and sold locally, then it will be subject to corporate tax. CT registration open for free zone companies or not at the moment. Registrations are open, but there are no limitations. You can register yourself at any time before submission of your first return. One more question. It is not clear why you state travel and tourism not a qualifying activity. Can you please elaborate under what provision you come to this conclusion? Because this is not falling under the definition of those 14 activities. So any activity which is being made by the qualifying free zone person with the non-free zone person, if this is not under those 14 activities, so it will be considered non-qualifying income, and any revenue generated by the free zone person from the non-qualifying income, it will be subject to tax at 9%. One more question, sole establishment companies are also supposed to be registered or they are exempt. Sole establishment companies are natural person, and if they are doing any business and revenues up to 1 million, they are not liable to register. More than 1 million to 3 million, they are liable to register. They are liable to, but they are not liable to pay the corporate tax by 31st December 2026. And if the revenue is more than 1 million after 31st December 2026, we need to wait for the decision from the respective authority. What will be the treatment? Might be they will give extension, might be they will say it will be subject to corporate tax. But less than 1 million natural person, you are not liable to register. Okay, guys, thank you very much. I really appreciate your support and stay in touch. So we'll come back to you once again after 1 week. We'll start our discussion. We have received a lot of cabinet decision. We have received a lot of ministerial decision as well. We need to discuss the transfer pricing itself a main subject. We need to look into this, what the different transfer pricing method. How can we apply the transfer pricing methodologies We'll discuss all these things one by one. Stay connected. Thank you very much and have a lovely day. Thank you. Bye-bye.